But let's go over to the projections of what they're expected to be at this meeting. So there is let's say 100% chance they're not going to do anything with rates this meeting. And this actually ticked up. This was actually lower yesterday, and this ticked up once again today to say in July they're not going to do anything either. So this doesn't mean mortgage rates are going to go down or mortgage rates are going to go up. Remember the last time the Federal Reserve cut rates over 0.5%? Mortgage rates spiked up, and that wasn't good news because it was economic factors. That's what I try to teach you guys on a daily basis, the economics behind all this. So let's look at the news that we got out so far today. It's right through here. We were looking at initial jobless claims because that was the pivot point now. We got inflation. Well, most of inflation is kind of in check a little bit if you take out the threat of tariffs. If the tariffs come in better or as is or better than expected, then hopefully the inflation piece of the puzzle is starting to retract. Now what they're saying is the economy is slowing down because of retail sales that we're getting. Look at the retail sales numbers that we got yesterday. So now that they're saying, maybe jobless claims or people are going to get more people are going to get fired. Well, it didn't happen then this time. So initial jobless claims, I don't know how they did this, but when they revised it, it was 245,000 last time. They expected it to come in at 246. It came in right at point. So I was hoping that this come in. If you don't believe me, check out yesterday's video. And then you had crude oil inventories crashing. Don't really care about those right now. We might care about those if the Iranian-Israel conflict continues, but the focus right now is what the Federal Reserve is going to do later this afternoon. They will be out telling us exactly what they're going to do, and they'll provide us also with the dot plot. Let's get over to the bond market to see how it is faring today. So the bonds are up 18 ticks. That means mortgage rates, they'll continue to ease a little bit. But we do have some information on jobless claims and housing starts. Now, you want house prices to drop because of supply and demand. Well, there's not a lot of supply coming to the market on the new builds, especially the permits. So how's this going to affect home prices? This might cause prices to stay stickier on the high side. But let's get to today's report from Rick Santelli, see what he has to tell us about the housing starts and also about jobless claims. Rick, take it away for me, buddy.
Jobless claims and housing starts data are going to hit the wires right now in about 2 seconds. Rick Santelli, standing by at this and CME in Chicago. Hey, Rick.
Hi, good morning, Joe. Yes, housing starts for the month of May expected 1,350,000 seasonally adjusted. Annualized units comes in light, extremely light. 1,256,000. That is definitely well below what we were expecting, and that would be the lightest going back, well, quite a ways. We're going back to, 1,256. We're going all the way back to May of 2020. May of 2020, find a smaller number. And on the permit side,